Good news for Nvidia. Oppenheimer raising its price target on the chip maker from $110 to $150 following its stock split. The analyst behind the call saying Nvidia has several tailwinds driving, quote, sustained outsized top line growth. And Brad, this is one of several price target raises that we saw. Analysts at Goldman Sachs, also Argus Research, raising their respective price targets. Now, Argus saying that there's continued momentum that we could see for Nvidia shares in 2025 after strong growth in 2024. So, this is a stock that has just been on such a tear, up about 150% year to date. And now all of these analysts seeing a lot more room to run as they go beyond just a data center, but also opportunities in some of their other areas of the business.
Yeah, Evercore ISI, Goldman, they had been out with their notes early to start the weekend and last week as well here. So all of these things considered, a lot more affordability perhaps on the mindset of retail investors in Nvidia, especially as it's been talked about by Goldman Sachs as the de facto AI play. More generally speaking now, it's more increasingly about where they can continue to see some of that chip demand, especially as the rest of the market is trying to move towards application. And what that means is the applications sitting on top of the models that then sit on top of the chips. And so if you've already got the chips, and the chips are going to continue to grow out. You think about the inferential technology that these companies were talking about at Computex a couple weeks back, or just 2 weeks ago, as everyone was saying, sure, we have 60,000 chip data centers right now. That could easily get to a 1 million chip data center. That continues to benefit Nvidia. That's why we have analysts come on our show talking about how, yeah, this market cap that we've seen it get to, this $3 trillion, could just be this still starting point
Which
here.
is crazy.
Yeah.
And especially after the 10-for-1 stock split.
Right.
One question I had was, have we reached a ceiling? Where is there more room to run here? And consistently, we've heard from guests that on our show, analysts, they're saying that there is more room to run. Gaming, automotive, they're two areas of the business that there's some potential growth opportunities there.
Yeah, Nvidia getting the best positioning stature from Oppenheimer on this, from the full stack AI hardware, networking, and software solutions here. So we'll continue to track shares of NVDA throughout the week here.
As we've seen in the video, Oppenheimer Holdings, the American investment bank, recently raised its price target on Nvidia stock to $150, implying an upside of more than 20%. On the other hand, Goldman Sachs also raised its Nvidia price target to $135. Both targets are very bullish for the stock, and the two firms explained why they chose to raise them in new notes for investors, so we're going to walk you through everything they said about Nvidia in today's video, as well as whether it's too late to buy Nvidia stock now or not. But before we do that, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Okay, but the tension seems to still be generally hogged up by Nvidia. Maybe that'll shift with Apple at the records, Jeff, but right now the commentary is busy on the semiconductors.
Yeah, I think the focus continues to be on the semiconductors, on NVIDIA in particular. And, we're continuing to see analysts weigh in post the split here. Argus raised the firm's price target to 150 from 110, kept a buy rating on the shares. They said following a highly successful 2024, NVIDIA is positioned for continued momentum in 2025, and shares have much further to go. The firm also says that they're looking for growth beyond data center and AI as the company's other end markets, including the gaming, professional visualization, and automotive, also accelerate. We also saw a note out of Oppenheimer, who reiterated an outperform, moved them to $150 for 110, said that they see NVIDIA as the best positioned in AI, benefiting from their full stack of AI hardware, networking, and software solutions. The analysts also raised their 2024 full-year earnings estimates to $2.62 and their 2025 estimates to $3.32 following the split. They said that they see several structural tailwinds driving the sustained outsized top-line growth in high-performing gaming, data center AI, and autonomous driving. So obviously we've watched the stock hit the market cap $3 trillion. We saw that last earnings report where revenue was up 262%. Data center revenue, grew 427%, coming in at 86% of their total revenue. And even gaming was on the rise, up 18%. So the numbers have come in really well for NVIDIA. They continue to do so. And analysts, investors alike continue to seem pretty optimistic about this AI boom.
The Goldman Sachs analyst behind the $135 call, Toshiya Hari, said that Nvidia's recent Computex keynote reinforced the investment bank's view that Nvidia is on track to maintain its competitive lead in accelerated computing for the foreseeable future. This is incredible news for Nvidia, as the accelerated computing market is massive and continues to grow with rapid speed. In fact, CapEx related to accelerated computing was estimated at around $90 billion this year, with significant growth expected, as AMD's CEO, Lisa Su, said that the AI chip market will reach $400 billion by 2027. Goldman Sachs also said that while they expect the large cloud service providers to continue to pursue internal solutions and engage with alternative suppliers to Nvidia, like AMD, they still envision Nvidia's R&D scale and ability to innovate at the data center level, deepening its competitive moat. From a hardware perspective, Goldman Sachs thinks that Nvidia's annual cadence of new product introductions and enhancements across GPUs, CPUs, NVLink, NIC, and switches formidable competition to its peers. The investment bank also recognizes the rest of the industry's push toward open standards, like Ultra Ethernet. However, the analysts think that whether the competition could keep up with Nvidia's rate of innovation is yet to be determined, given the urgency at which large enterprises are developing and deploying generative AI models. Separately, the analysts also consider access to supply as a competitive advantage Nvidia possesses relative to its competition, and based on conversations they had with industry participants, Nvidia appears to have secured adequate supply of components ranging from advanced packaging to HBMs to likely exceed the Wall Street consensus estimates for 2025. So, this is why Goldman Sachs is bullish on Nvidia, and we're going to get into why Oppenheimer shares this opinion right now. Hello everyone, and welcome back to Investocracy.
All right. As we just heard from our guest earlier this morning, Robert Cantwell, looking at Oracle this afternoon to get an update on another hyperscaler competitor to see how much they're buying. Says if there's a big CapEx number there, it could be good for NVIDIA. I thought that was pretty interesting. I think that's probably fair and true. They're trying to buy the dip a little bit here. It wasn't much of a dip this morning, NVIDIA, but anytime there is anything, it usually gets scooped up like it did yesterday. So price target's moving higher. Don't imagine that's going to scare anybody off. AMD still down though, Jeff. You think that's because people don't need it as a cheaper proxy anymore? Or is that just because no one's showing AMD as much love on the analyst side?
I think it's a little bit of both. I think it's there isn't as much love being shown to AMD. I mean, NVIDIA is clearly a market leader here, especially on the AI side, controlling roughly 90% of that market. And the fact is, NVIDIA's second largest market platform, which accounts for about 10% of their revenue, is gaming, right? And the company, expectations are fairly high. We heard from the analysts, but also from others that the graphic cards for computer gaming are going to continue to rise. We've heard a lot about PCs. Kind of coming back in the second half of the year and beyond. I think that the gaming side could certainly add more revenue, and that's an area where they're going to be competing with, companies like AMD. And now challenges are certainly that AMD and Intel and other names are, growing competition. There's also some issues in China. There's these high expectations around AI chips. Those are all, potential challenges for a company like NVIDIA. But at the same time, when you've got their data center growing, 200+% year over year in these quarters, and the supply continues to remain kind of constrained, I think that's a real positive. And, the fact is their H100 chips, they almost can't, they're selling so many and they can't make enough for what everyone wants. Now they've got the Blackwell chips coming out, which I think investors are pretty excited to see what sort of numbers we're going to see come out of those.
Analyst Rick Schaefer of Oppenheimer significantly raised his price target on the stock to $150, showing that he's certainly optimistic about NVIDIA's growth prospects. Schaefer and his team praised NVIDIA as one of the best-positioned companies in the AI industry, citing its full-stack hardware and software solutions as likely growth-driving catalysts. Schaefer also highlighted CEO Jensen Huang's recent tour, which has been excellent for driving hype around NVIDIA's upcoming projects. But these aren't the only factors to consider when assessing the company's path to further gains. The analysts think that with Nvidia stock trading at a discounted level, retail investors are far more able to buy shares now if they didn't buy during the rise of ChatGPT, and they recommend buying Nvidia now before markets adjust and shares start soaring again. This is one of the reasons why it's not too late to get into Nvidia stock, but there are many more other reasons that we're going to talk about now. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Stocks moving lower this morning as investors await two big tests for the markets tomorrow, CPI and the Fed decision. Even with fears around higher for longer rates, strategists broadly expect big tech to lead stocks higher through year end, driven by AI demand. Our next guest is one of those strategists. We have Abby Yoder, JP Morgan Private Bank US Equities. Abby, thank you so much for joining us in studio. And you have a pretty bullish outlook here. 5,500 year-end price target for the S&P. You see that going up to 5,750 next year. What's driving that?
So I think importantly, when we're thinking about the breakdown of returns, right, that's earnings and multiple. When we're thinking about both the 5,500 and that 5,700, that's all coming from earnings growth. And that's between 8 to 10%, depending on what calendar year you're looking at. And the majority of that is being driven by tech, right? And what we saw in Q1 was this really, just strong across the board quarter in terms of earnings. We saw all 11 sectors beat in Q1, but a lot of that strength was driven by tech. And in particular, we saw their margins expand. And so that's very important to us when we're thinking about, 60% of costs are fixed. How do you see that incremental uptick in terms of earnings growth? We're seeing that from tech in terms of their margin profile. And then on the valuation front, we actually have valuations contracting a little bit. And that again is also being driven by tech. And when you think about it from a natural standpoint, their prices are high and their valuations higher than the market at the moment, but they're going to grow into that valuation, right, through their earnings growth, so then you naturally see that valuation compress from a large cap tech perspective.
All the bears who have been saying that Nvidia stock would plunge just saw their prediction come true, but not in the way they expected. The company did a stock split, and its share price at the market open after the split was roughly 10% of the previous closing price. Still, the stock has soared nearly 30% since Nvidia announced its stock split during its Q1 earnings on May 22nd. So, is it too late to buy Nvidia stock now? There are two answers to this question, an easy one and a hard one. But let's start with the easy one. It's absolutely not too late to buy Nvidia stock because the stock split changes nothing about the company's core business. Reasons to buy Nvidia stock include the skyrocketing demand for its cutting-edge AI GPUs. According to CEO Jensen Huang, demand for the company's flagship H100 chips is still so strong, even as Nvidia prepares to launch the more powerful Blackwell GPUs later this year. He also said that H100 demand grew throughout the quarter, right after the company announced Blackwell, so this should tell you that Nvidia won't be seeing a demand problem anytime soon. There's also the massive potential of the company's upcoming Blackwell platform. The company said that it expects to see a lot of revenue from Blackwell this year, and Jensen said that demand for both platforms will outstrip supply well into next year, with the complexity of these chips also challenging the company's efforts to keep pace. This could mean that Nvidia will be able to secure huge revenue streams for the next 2 to 3 years or even more. However, it's possible that Nvidia's shares could fall further after the big surge leading up to the stock split. On the other hand, the stock's momentum could accelerate as retail investors who were previously on the sidelines because of the sky-high share price start buying Nvidia. Now, let's get into the hard answer to whether it's too late to buy Nvidia stock. Some investors and analysts are saying that it's now too late to buy Nvidia stock for reasons unrelated to the stock split. Yes, the demand for the company's chips remains extremely strong, with its sales and profits jumping through the roof. However, some would argue all of this is already baked into Nvidia's share price. The stock trades at nearly 71 times trailing 12-month earnings and almost 47 times forward earnings. Those valuation metrics reflect a lot of anticipated growth. Even Nvidia's price-to-earnings to growth, or PAG, ratio of 1.51 based on 5-year growth projections might not be considered very attractive to some investors. However, we could say that Nvidia's valuation isn't too expensive given the company's earnings prowess. and Nvidia's PE multiple is actually relatively cheaper than the multiples of its peer group. For instance, Nvidia's main competitor and US-based semiconductor company, AMD, is trading at a forward PE of 47.8x, while Netherlands-based semiconductor stock ASML is trading at a forward PE of 51x. Interestingly, its current valuation is still hovering around its 5-year average of 46.6x, despite the earnings, margins, and stock price having grown multifold. These are attractive price levels and likely present a reasonable buying opportunity given the supernormal growth potential for the AI market titan Nvidia. So, to conclude, we can say that long-term growth investors should consider buying Nvidia stock. Nvidia has climbed to become the second most valuable stock in the world, with a market cap of $3 trillion, a significant leap from just under $100 billion less than 5 years ago. And despite the increasing competition, Nvidia continues to enjoy a sizable market share in the AI industry, which will continue to grow by leaps and bounds in the coming years. Therefore, at the current levels, Nvidia stock is definitely a buy. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.